All right, so if you're a business owner, you know the drill. You make some profit, and what's the first thing you do? You pour it right back into the business, right? It's just what we do. But what if that default move, that automatic reaction, is actually a huge blind spot? What if it's costing you, big time?
I love this question because it really gets to the core of this internal battle that every single founder has. See, you're wearing two hats, right? You're the entrepreneur, the passionate builder, but you're also an investor looking for the best return. The problem? When it's your own baby, your own company, that entrepreneur hat almost always wins the fight. So today, let's figure out if that's actually the smart play. Okay, so to really get to the bottom of this, here's our game plan. First, we'll look at this idea called the Carnegie approach. Then, we'll see why so many of us get it wrong. After that, we're going to put your business through a little something called the investor's test. Then we'll chart a path forward and finally talk about the big one, making decisions with numbers, not just your gut.
All right, let's dive into part one, the Carnegie approach. Now, this is a way of building wealth that honestly, it kind of flies in the face of all the typical advice you hear about investing.
So you know how they always say don't put all your eggs in one basket? Well, the Carnegie approach says no, do exactly that. Put them all in one basket. But, and this is the part people miss, you have to watch that basket like a hawk. I'm talking about an obsessive, deep dive focus on the data so you know, without a doubt, the exact right time to buy low and the exact right time to cash out high.
And does that sound a little familiar? Because as a business owner, that's exactly what you're doing. Whether you realize it or not, you're a Carnegie-style investor by default. All your money, all your time, all your sweat, it's all poured into this one single thing, your business. But here's the kicker. You're probably only doing half the job.
Yeah, and that missing half? It's the most critical piece of the whole puzzle. You've got the all eggs in one basket part down cold, but you're likely investing without the one tool that makes the whole strategy work: objective, hard data. Just think about this for a second. An investor in a public company, right? They get these clean, audited, super transparent reports. They can make decisions based purely on analysis. Now, look at your own business. Be honest. Is the data that clean? Or is the decision to pour more money in based more on, habit, hope, just raw emotion? That gap, that is the dangerous blind spot we're talking about.
So really, it all comes down to this one really tough, honest question you've got to ask yourself. Just look at your business and ask, do I even have enough data here to make a truly smart decision about where to put my investment dollars? And look, if the answer is no or even a hesitant maybe, well then we've got a problem to solve.
Okay, so let's figure this out right now. It's time to put your business under the microscope with a really simple but pretty powerful thought experiment I'm calling the investor's test. And to do this, you have to do one thing. You have to take off that passionate founder hat and put on your cold, calculating, ruthless investor hat.
You ready? Here's the test. I want you to, just for a moment, genuinely try to forget that you're the boss. You're not the one running the show.
And now ask yourself, with total honesty, would you take your own hard-earned savings and invest it in this company? Seriously, if you were just a stranger off the street looking at the raw numbers, would you say, yep, that's the best place for my money?
And here's the final knockout punch. Forget your gut feeling. Forget what you believe about the business. Is there enough cold, hard, quality data to even make a rational decision in the first place? If the answer to any of that is no, then your business just failed the investor's test.
Okay, deep breath. If that little exercise made you squirm a bit or feel even a little uncomfortable, that's actually a good thing. It means you're seeing the gap between being an owner and thinking like an investor. And the great news is there is a super clear path to close that gap.
This path forward is really just 3 simple steps. Step 1, and this is the foundation for everything, you have to get high-resolution data. Talk to your bookkeeper, your accountant, whatever it takes. Once you have those clear numbers, you can move to step 2, finally making truly data-driven decisions. And only then, with that clarity, can you even begin to think about step 3, which is smart diversification.
And hey, don't forget, getting good numbers isn't just some big abstract exercise for making one investment decision a year. No, this makes you a better business operator, like tomorrow. Good data shines a bright light on where you're wasting money, where the real opportunities are, and just helps you run a much, much tighter ship every single day.
You know, having this data-driven mindset totally changes how you should think about diversification too. It's not about giving up on your business or jumping ship, not at all. It's about building a financial safety net. Look, your company is still the star of the show, absolutely. But you're just smartly protecting yourself by not having every single dollar you have in one single
unanalyzed basket.
So when you boil it all down, all these steps, all these tests, they're all leading to one huge fundamental shift in your mindset. It's about learning to think less like an emotional owner and way more like a rational investor.
And really, this is the choice right in front of you. On one side, you've got the emotional owner. Their decisions are fueled by gut feelings, old habits, and a whole lot of hope. On the other side, you have the rational investor. Their decisions are based on cold, hard financial data, return on investment, and crystal clear metrics. The entire goal here is to consciously, deliberately move yourself from that first column over to the second.
Now, let me be absolutely clear about something. The point of all this is not to tell you to stop reinvesting in your business. Of course not. It's your passion project, it's your baby, and it's probably your single best tool for building wealth. The goal is just to make sure that every single dollar you put back in is a smart choice, a rational choice, a choice that is totally justified by the numbers.
I mean, when you step back, it's just common sense, isn't it? You owe it to yourself, to your team, to the future you're trying to build. It just makes sense to invest in your business based on the numbers, not just on emotion.
So we're going to leave you with that one big question to go and figure out for yourself. Your homework is to go get the data, actually run the numbers, and then answer this question with brutal honesty. According to the numbers, is your business truly your best investment? The answer to that? Well, that's going to tell you everything you need to know.